Tell you sort of a brief intro on Citi Ventures. We're Citi's main strategic investment group, and we are mandated to find and invest in companies that are strategically relevant to our businesses. As you know, we have a large consumer business and we have a large institutional business, trade being a part of that institutional business. And so we invest across fintech companies. We also invest in some areas of enterprise. We invest in sort of, within fintech of various areas. It could be wealth management, lending, personal financial management. It could be trade. It could be institutional money management, FX, all of those kinds of things. We invest across the board. And we have a tight relationship with our business units. We engage with them to understand what's of interest to them. But we're also looking in the outside world. Our team meets with over 1,000 startups a year. We invest in a handful of them, but that's how we understand what's going on in the outside world and then bring that into Citi. We're a cross-stage investor. We typically invest post the product, but all the way from there to very late-stage companies, but always with a view of like, how does this fit with Citi's strategy? How does it fit with areas that Citi is interested in? And also whether the investment actually shows promise of becoming a market-leading company, a company that actually disrupts a particular industry. So that's sort of the way we think about the world and a little bit about Citi Ventures.
Wonderful. And I know when we started talking to you about presenting and to your team, we were thinking about particular topics, and you flagged embedded trade as an emerging growth opportunity. So maybe define what that is and define how you're thinking about it and where you think the opportunities are.
Yeah, absolutely. One of the things that we've been thinking about, and I'll sort of set the context for how we are thinking about embedded trade. Other people may define it differently, but we started to think about embedded finance a while back, right? And we in fact made some investments in and around that space. For example, we've been partnered with and investors in Grab for the last few years. And that's an example of how, we thought about embedded finance, where our products and services can get embedded in other large online properties. And that led to the thought of, what does this embedded finance area mean? And so we came up with a simple framework for how to think about it. There was sort of the version 1.0 of this world, where it was mainly technology companies and software companies selling to banks and large financial services. And then you can look at what happened in the 2010s decade as 2.0, which is, all of these services, financial services coming online and digitizing and so on and so forth. And then we're off to sort of the 3.0 of the fintech world, where we think that embedded finance is going to be a big part of that trend. So what does that actually mean? It means, you take sort of modularized financial services and then embed them through easy APIs to, within other properties. But what does that actually mean in terms of other industries? What you'll see happening is sort of this fintech layer getting embedded across the board, irrespective of whether it's in trade, which we're going to talk about some more today, or healthcare, or it could be in energy, or it could be in any different all these different industries where sort of the fintech layer becomes embedded within that particular industry. In other words, the nature of how business gets done could potentially change. So we think that it has deep repercussions on how industries operate, how market structure operates in various spaces. And so in that vein, we started to talk about embedded trade. I mean, Citi has a large trade business. We're global with sort of presence in over 90 plus countries physically, over 150 countries in which we operate. And in fact, many multinational corporations use Citi for trade. And so we started to think about how the trade world is changing. And so if you think about sort of everything that's happened in the consumer world, right? The institutional world is following, or same thing happens in software. Like there is consumerization of enterprise software, and you can say there's consumerization of enterprise fintech. And so we view that as one of those trends that's happening in the enterprise fintech world. And so you start to think about how you can make it easy for people to do the things that they need to do, right? And so one of the things that they need to do is, in the old world, or maybe even in today's world, organize for supplies. You go to your supplier, you have a contract with them, and then you have to place an order. You have to arrange for logistics, and then there's a whole bunch of paperwork involved in actually paying for it and letters of credit or whatever the case may be, and then you organize for it to get shipped. But with the digitization of everything that's happening, it creates opportunities for all of this to be a lot more seamless. So when we think about our clients and how, what they need to do today, I think there's a future where, you have digital freight forwarders, you have digital marketplaces, and there becomes an opportunity to embed, not just payments, but also trade finance within those properties in a fairly seamless way, right? And I think, there's products and, business models and things of that nature. And then there is user experience and the ease of use and how it gets embedded into your workflow. And this is an aspect of sort of being where the customers are, right? And embedded trade allows you to do that by embedding these, traditionally trade finance and payments kinds of products in the workflow of the customer as they're, procuring materials and getting that shipped. Does that make sense?
Yeah, it totally makes sense and well explained. Can you give some examples of the companies you've invested in the space?
Yeah, absolutely. So I think in the embedded finance world, like I gave you the example of something like a Grab, but more recently we became investors in a digital freight forwarder company called Forto. It's a company that's based in Europe, and they are, they do sort of land shipping, ocean shipping, and they work with many multinational clients. And that's an example of a company that we've, we're not yet partnered with, but we're investors in, and exploring various ways to work with them. And the question for us is, we have a pretty broad business, and we want to make sure that we can cover that waterfront with sort of the investments we make. Forto being a great example, but it's actually a huge number of companies that are out there that are working in and around the space, right? Whether it's freight sort of marketplaces or forwarders or enablers, third-party logistics companies, things of that nature. So we're looking at the entire landscape and saying, where should we be and where is the world going? And that's how we think about this.
Got it. Hold on. We getting a question from the audience. Fong asks, do you invest in early stage startups or just later stage? Like, I guess, what stage do you invest in?
Yeah, I think I alluded to this a little bit earlier. So we're cross stage investors, except we don't do very early stage, seed stage companies, right? Mm-hmm. So we typically invest in companies post product. So you could be, just out of beta with some very early customer traction, all the way to some very late stage companies with, 50 or 100 million of revenue or more, and everything in between. I think the approach that we take is, if it's strategic to our business, if we think it's strategic to an industry that we care about, then we will invest regardless of stage. And that's the approach that we have taken. In the very early stages, we occasionally go into them, but it's not a matter of sort of taking the risk. It's more a matter of like, does the company have a product that we can try? Can we actually pilot something? And we'd rather sort of invest in companies where there's already something there so that it's a faster time to market, if you will.
Another question came through from the audience as you're speaking, Arvind. This time from Matthew. Do you look at blockchain crypto companies? And if you do, is it from a payments angle?
Well, I think we do look at blockchain companies. And, there's obviously a lot of work in and around Citi on digital assets and the like. Specifically, as it relates to trade, maybe I combine that with sort of the idea of trade. We are investors in a company called Comgo. So if you think about Comgo, they started out actually building sort of a trade network based on blockchain, specifically for commodities. And so there we did sort of go down the path of a company that started, based on a blockchain. Another company in our portfolio is a company called Contour. And they're trying to digitize the whole and automate the LOC process, which can be quite cumbersome by, putting it on a distributed ledger and they're doing it across the board for not just commodities but even other areas. And so we do look at blockchain companies, and I think it's got a high potential to help in this area, right? I mean, you want to know that a technology actually solves a particular problem, and I think that pairing may actually happen with this world of trade.
Totally agree. You're getting a lot of questions. I'm going to ask ones that I think are germane to what we're talking about. Hirotaka asks, what is your priority, strategy or financial return as a corporate venture capital fund? And how do you evaluate the return from a strategy point of view?
Yeah, absolutely. So there are two parts to that question. The first part of the question is, how do we think of ourselves? Are we strategic or are we financial? And I would say it's both. Is the short answer. The longer answer is, it depends. It's a situation by situation thing, company by company thing. Conceptually, the way we think about it, Zach, is if there's a company that's going to disrupt a particular market that Citi cares about, it's also going to be very successful financially, right? Mm-hmm. A company that's going to go out of business or is a small company that's growing at 10 or 20% isn't going to be disruptive to our world, right? So we really apply that filter to figure out, it's actually a market signal for us, isn't it? Right? If something is growing rapidly, that actually means that there's market adoption, and so hence what's going on here. It behooves us to understand the space and actually understand these companies. And so we very much take the view that first order, I mean, this is not always the case. First order, companies that are highly strategic to us will also be, financially attractive from a venture return standpoint. And the flip side of that is also true. But it really comes down to what areas do we invest in, what kind of companies do we invest in. And what we look for is that linkage to Citi and Citi's businesses, right? So trade, great example, very important to Citi. So we've been active there. We've made a few investments. But if there's an area that is, something outside of financial services that Citi can't be a partner or can't be a customer of, we won't invest in those companies. And the linkage with Citi can be sometimes near term, and something that our business unit leaders look at and say, we want to partner with this company, in the next 12 months, 18 months. It's a near-term opportunity, and sometimes it's longer term. We do look at them and say, they're doing something interesting and important in the area we care about, even though it doesn't fit with priorities for the next 18 months. It's still something that we need to invest in and learn about. So we have sort of a fairly broad aperture when it comes to that linkage with Citi, but always in areas that our company cares about, and in startup companies that we think have the potential to change those markets.
That's very interesting. What are you looking for? We talked a little bit about companies in the portfolio already. What are you looking for in new solutions from startups in the category? And how do you judge their success? You talked about growth.
Yeah. I think in the trade category and in the fintech category in general, so there are some comments that I will make that are more relevant to sort of how we just think about investing in startups, period. And then how do we think about investing in fintech and in trade more specifically? So maybe tackle both, right? On the first part of it, sort of won't go through the laundry list of like team, technology, and all of those kinds of things that we look for. But when it comes to something like trade, it's sort of an industry on its own, right? Like your sort of 24-year-old software developer, engineer who's never worked in trade before is unlikely to know about the space. So we're looking for expertise, right? We're looking for entrepreneurs and management team members that understand how trade works and what the industry looks like today. What is that market structure? What are the problems that need to be solved? How do you partner with large companies? Because this is a world of large companies, large global enterprises as well as the banks and other financial institutions. So we look for that maturity of thought, even though the company may be an early stage company, relatively speaking. We want to make sure that these entrepreneurs are thinking about it in the right way, right? So that's something that's important to us. Secondly, we look for sort of the technical team and the chops of the technical team. And the reason I bring that up specifically is the following, right? In financial services, you sometimes investors take the attitude, technology investors like myself, been doing this for a little while. You take the attitude that, software is a matter of throwing money at the problem, right? And some people come from the world of financial services. They understand the product, they understand the market, but they, let's say, go get a consulting shop to go build software for you, right? Now, maybe you do that for the first version of it, but later on, you can't scale a company if you don't actually own the technology pieces and, aren't deeply, integrated with the technology team so that product, sales, marketing, and technology are working hand in hand. And there's a tight loop between all of these areas. I mean, that's part of the reason why startups succeed, right? Sometimes it's just that extreme focus on something. So we want to make sure that these companies have their own technology stacks, that they have engineers who can churn out new features, can have good frequency of new releases, write good code, and have, security is important in our world. Like, can they write, write good code and so on and so forth. So we look closely at sort of the technology team and their ability to write great code. And then the final thing that I'd say, especially in fintech, that we care about is, risk management and compliance and, all of those areas that many consumer companies and other companies may not care about so much. But in our world, it's, can make or break a company. And so we, even if it's an early stage company, and even if they don't have a 200-page book on how they do AML or KYC, we want to know that they're thinking about it, right? We want to know that they understand that it's important. So those are some of the things that are, I would say, more relevant to fintech and to, trade that I would point out.
I think that makes a lot of sense. And you talked about sort of the tie back to Citi. So when you think about the applications of embedded trade, how do you think those solutions within teams like at companies like Citi will benefit? And more specifically, how do customers stand to benefit?
Yeah, I mean, I think that's in fact the exciting part of this, right? Because this could be a win-win-win. I mean, it's a little bit of like, how do large companies, incumbents like us, how do we react to this world, right? Because everything that we're talking about is highly beneficial to customers, to clients, right? Because if you think about it, the client is trying to, order supplies and get it shipped and have that supply shipped. They're not in it to actually make the payment and do the financing and to do this and that and the other, right? And so to the extent that you can remove the friction from those things by actually being, embedded into the workflow of the client, the easier it becomes for them, right? But what does that also mean? It means that trade finance providers or, banks or financial institutions, we need to modularize, we need to digitize, we need to automate, right? Like we have to become smarter players in this, remove some of the manual processes. And in fact, we need to think about it from front to back, right? From whatever the customers and clients engage with all the way to the back end of customer support and how we, operate as a business. So I think the incumbents and large companies like Citi, we have the opportunity to react to this new sort of more digitized world by saying, how do we modularize? How do we connect through API? How do we get sort of this old Coke thing, right? Arm's length of desire. Like you need to have that trade finance available to you when you need it. In fact, we've seen studies where there's a huge amount of trade finance demand that's not met today. There's a gap in that because it's just hard. Mm-hmm. So if you can make it easy, I think that it actually, helps a lot of, especially smaller and medium-sized companies that are sometimes starved for that type of credit.
So we have about 4 minutes left in our conversation. I have one last question to ask you, and it sort of dovetails with the question that came in from the audience. So sure. Dion asks, trade is highly fragmented. Do you think of getting each part of the ecosystem digitized or going for the end-to-end digital transformation? The question I wanted to ask you, I'm sorry to hold everything together at once, is sort of as you're looking out into the future, what are you looking to invest in next? What's next on the horizon, and what are you looking for in terms of deploying capital?
Yeah, absolutely. I think to answer Diane's question first, I think it's very, this is, given that it's fragmented, given that it's a massive ecosystem, you can't sort of wave a magic wand and say, we're going to digitize the whole thing, right? So you have to take it piece by piece, right? And, the way these things work, and, in my 20 years in venture capital, like when you have one thing that's working, that's successful, maybe a company, maybe a bank partnered with a company, when that succeeds, then that grows and becomes very successful and becomes the model for the rest of the industry. And I think that, embedded trade could go the same way, even though it's a very fragmented, market today. So, but it'll happen, piece by piece is sort of my thinking around this. To your question, sort of more broadly, how are we thinking about it? I would say like areas of focus for us. I think there is a immense opportunity in sort of digital wealth and wealth tech, as it's being called. Front to back in wealth is an interesting area for us that we're, looking at all the way from user experience, aggregation, democratization of wealth, all of those areas are of interest to us. We're looking at next gen commerce. I mean, the pandemic has sharpened focus on not only what problems digitization can solve, but it's also opened up opportunities that some people didn't see before, but are now extremely clear. So, earlier this year, we, invested in actually a fairly early stage company called Blackcot. And, other areas around, commerce are things that we've been looking at, digital commerce. The third area that I'd mention is neobank infrastructure. I mean, it's an area that's been around for a little while. I wouldn't say that there are sort of huge breakout companies there yet. And we're also trying to match, where Citi is with something like that. And so I think it's an interesting area. Like, I think it's an area that's going to be instrumental in, at some point, replacing all the mainframes that, large companies still use to more modern infrastructure. So that remains an area of focus for us.
Arvind, always great talking to you. Thanks for joining us at the Big Bang Theory.
Thanks for having me. It's a pleasure.